Siddharth Bothra is the Senior Vice President and Fund Manager at Motilal Oswal, who now joins in on the show. Good morning and great to have you with us on board. Let's just talk about the mood of the environment the mood of the markets right now, because it seems that for a fact what has kept the market to a certain extent afloat is the fact that domestic institutional investors have been very supportive, pouring in money. Do you think, Siddharth, that this trend is likely to continue even with expectations of the fact that we will see the markets spiked with volatility up until perhaps May, which is the general consensus?
Hi, good morning. I think definitely the mood for the market has changed. If you just step back and look at the context, in the last couple of months, we've been seeing an event-driven correction where, suddenly crude prices had moved up sharply, the macros had deteriorated quite a bit, there was rupee volatility. Add to it, there was concern around what would happen on the political front. And essentially, there was a fear element in the market. So while we did see markets correct sharply, but typically this is what you see in an event-driven correction, that the corrections are a bit sharp and quick, and then as things improve, the pullback is also fairly strong. I think with perspective to what held the market and why we didn't see a deeper correction, one of the things you rightly mentioned is the domestic inflows continued to be strong. And even in the most volatile times, while it did fall from the peak, we never even reached somewhere near negative, or it continued to be upwards of 1 billion. I think going forward from here, while you will continue to see volatility around it, my sense is that with the fear of any major correction, or with the fear of unknown around these events gone and things stabilizing, you would probably continue to see this secular trend, and your overall liquidity flow should continue to be strong, is my sense.
And so what is it that you're advocating in terms of a defensive strategy for 2019, if you're working with the premise that 2019 would be a volatile year?
See, I think we already been through midst of things which have made market pretty volatile. In fact, if I were to look ahead, I would guess now we are seeing signs of market becoming more and more broad-based. If you look at several of the sectors, or several segments where things have been very, very muted, or been one way down for a very long period of time, they're showing you signs of recovery, whether it be the capital goods side, whether it be short duration cycle orders, many of the other sectors, even the outlook for say so-called corporate banks, that's also improved. So I would think that increasingly you will see a more broad-based rally, and actually the time to be more on the defensive would have been, say, 6 months back or a couple of months back. I think increasingly you would see a positioning which is more towards growth, more towards broad basing, and looking at segments where you're seeing some nascent signs of recovery come in.
Siddharth, give us a sense as to what the outlook is on the overall NBFC crisis. You did say that it has emerged as one of the big concerns, which of course it did take everyone by surprise. But yesterday at the India Economic Conclave as well, we had an interesting discussion, and it seems like the road ahead seems quite stable, that a lot of the fears are now behind. Do you tend to concur that when it comes to the NBFC crisis, that now one can even look to potentially invest into some of these counters, or do you believe that there is still no silver lining and you're circumspect?
I think in case of NBFCs, first, there is a bifurcation. There's some which are, probably clear divide between some which are like very, very strong, some where you had some concern. And while, the key concern on, some of them facing huge liquidity issues, or, some other major concern, I think those things are now behind us, because, liquidity outlook is improved, the rollovers have been fairly okay. But I think the concern area for NBFC remains is the fact that almost most of them, whether it be HFCs or even some of the other NBFCs, they have very large exposures on the real estate, developer side, and so on. And the outlook there is still not very clear. So in an environment like this, I think I would continue to have a cautious view on NBFCs and view it very, very selectively.
Where would you be most constructive right now? Would you be adding positions in IT and pharma?
We already have, both these segments. We have decent exposures. I think incrementally our exposures would be probably increasing more, in some of the sectors where we are seeing good signs of turnaround, and where we are seeing probably the prospects looking brighter once we move forward a couple of quarters. So I think that's where we would probably see our weightages go up.
Okay.
All right, we'll let you go on that note. Many thanks for taking time out, Siddharth, and giving us a heads up as to what your position is on the markets, the sectors that you're bullish on, as well as the outlook going forward.